This is Brad Berry, Chief Investment Officer and Portfolio Manager with Dynamic Wealth Group. Welcome to this monthly market update for January 2025. In this video, we'll go over some of the major market drivers in the first month of the year and the start of President Trump's second term. Now, the markets began the year with gains despite volatility, with major indices being up. The S&P 500 by 2.7%, the NASDAQ by 1.6%, and the Dow by 4.7%. Meanwhile, economic indicators showed mixed signals. GDP growth came in at 2.3% for the previous quarter, but inflation remained above target, with the consumer price index up 2.9% from a year earlier. Now let's get into some of the key events that most affected the markets and the economy over the past month. First, Chinese company DeepSeek reported an AI breakthrough, causing technology stocks to decline, with market uncertainty rising from these claims. DeepSeek claimed a 95 to 97% reduction in the resource and energy requirements to train cutting-edge AI models, leading to a market sell-off with the biggest loss in value for a company in a single day, when NVIDIA fell by 17%. This impacts all investors, not just those focused on technology stocks. This is because the tech sector, including the Magnificent Seven stocks, has grown in size and importance, driving the overall market. Tech sector valuations have also risen substantially compared to other market segments, highlighting the importance of diversification as well as our philosophy on preparation over prediction, as virtually no one was talking about DeepSeek before their announcement. This highlights the phrase I've said many times: it's the bus you don't see that hits you, not the one you do see. Next, President Trump signed executive orders to implement new tariffs, 25% on Canada and 10% on China. He also signed an order for a 25% tariff on Mexico, but agreed to postpone for a month in exchange for concessions on border security. These tariffs were expected, but have certainly rattled investors and the market nonetheless. It's important to keep in mind, though, that the first Trump administration's tariffs also led to investor concerns. Markets, though, still generally performed well over that period, and tariffs were often negotiation tools to achieve trade deals such as the U.S. Mexico-China trade agreement and the Phase 1 deal with China. Meanwhile, the Fed maintained interest rates at 4.25% to 4.5% at its January meeting, following 3 consecutive meetings of cuts, given that slight acceleration in inflation, a strong job market, and continuing economic growth. January markets experienced overall gains despite the volatility, highlighting the importance of maintaining a long-term focus when it comes to investing. As these developments escalate and the tariff story evolves in February, investors should maintain perspective and not overreact to day-to-day news. We hope you found these high-level insights helpful. If you are a financial advisor and would like more information on our multidimensional approach towards asset management, feel free to download our eye-opening white paper titled Busting 7 Risk and Return Myths. You can click on the link below or visit our website at dynamicwg.com or email us at info@dynamicwg.com. If you're an individual investor, we are happy to address any questions you may have and put you in touch with a qualified advisor if so desired. Until next time, take care, everyone, and make smart, logical, and fact-based financial decisions.